If you haven't been living under a rock for the last year, you've probably heard of this guy. His name is Alex Hormozi. He started as a gym owner and went on to create a successful company called Gym Launch, which consulted with other people on their gyms, helping them, run marketing campaigns, and ultimately sold this company for tens and tens of millions of dollars to a private equity firm. Since then, he has blown up online, giving advice on sales and marketing, and he has an amazing book called $100 Million Offers. Now, I'm a fan of Alex. I'm not gonna lie. I've seen a lot of his content. I think he's fantastic. There's a lot of things he knows that he just isn't sharing. I can just kind of tell as a fellow creator. But now Alex has stepped into my domain by coming out with a video called the 24 Investing Rules to Get Rich. And so today I want to react as a financial advisor to this video. I am a certified financial planner, and instead of just seeing one person's track and living one life, I've seen hundreds of people and all of their finances. I've seen people risk it all and lose it all. I've seen people risk a lot and make a lot. I have witnessed many people firsthand go from the starting blocks in their business to creating cash cows that generate millions of dollars a year or tens of millions of dollars a year. I've seen people take their entire inheritance and risk it in some crypto and have it all go to zero. I'm able to start to discern patterns of what really kind of works and what really doesn't. And so today I am going to be reacting to Alex Hormozi's tips on how you can get rich investing. Are you guys ready? Here we go.
24 rules of investing. These are all structured as if-then statements. If we learn a principle, then we can continue to use that winning principle over and over again. The reason some of the greatest investors publish books about their principles is because they know if people make the right decisions, they get the right outcomes over a long enough time horizon. My name is Alex Hormozi, and I make these videos because I hope that
Fantastic intro. He kind of nails this. By the way, I'm looking for reasons to disagree with him, and I think he's nailed this first part, right? A lot of people need to understand that investing is an iterated game. It's something where you're really playing the law of large numbers. You know, the greatest traders don't win every time. They only win 60% of the time. But they just make sure that their wins are so asymmetric, so much larger than their losses, so that they can win just 10% of the time more than they lose. But if they do that for a long enough period of time and have larger gains than losses, they're going to end up ahead. So I love what he started off saying here by saying over a long period of time, if we have the right mental frameworks, we will win given many iterations, rather than someone just throwing money at some shitcoin, seeing it 100x, and then giving us tips on how to invest. So I'm proud of Alex. I think he did a really good job here.
if you have a $3 million to $100 million company, you'll ask us to invest in it and we can help you grow. If you can't buy it twice, don't buy it once. And realistically, probably 3, 4, 5, 6 times. When I got into investing, I used to think, oh, I'm gonna put like a third into this. And they were like, dude, no. Your biggest allocation might be 10%. Oh, if you can't buy twice, don't buy it once. If you're worried about it, you can buy insurance for it. You can get insurance on anything. For example, people are like, I'm afraid of running out of money. You can literally buy money for the rest of your life. You can literally give money and they will have a guaranteed income until you die. Those are called annuities. So if you have a specific concern, just buy insurance for it and know that it's covered. If a deal feels like a grand...
Again, I think he's totally right. That being said, I think it's good to have a critical eye towards any insurance you come across. Typically, insurance pays the person selling it a lot of money and pays the company a lot of money. Yes, people need insurance. It's absolutely imperative that you have insurance on your home, you have insurance on your house, maybe even insurance on your earnings and your health and all these sorts of things. That being said, insurance is literally just a cost that you pay to have mental peace. It's not actually a great financial decision. It's a great financial decision in a very tiny, small amount of circumstances. And so even as an advisor who sells insurance and deals in insurance, I would often recommend you approach every insurance conversation with a critical eye. But Alex is right. You can buy an annuity if you're scared of income. You can buy insurance on anything if you're afraid of losing it. It's just a cost you're going to pay to have that peace of mind.
Slam, get a second opinion. Whenever I'm looking at something and something looks amazing, I automatically send it to other people. I must not be seeing something like, I need someone else's eyes on this. It's a good, easy decision-making rule for yourself for investing. If you don't know how you...
I heard that Warren Buffett actually, at points in time, would bonus people if a deal didn't go through. So he would actually pay a devil's advocate to make sure that all the people around him who wanted a deal to go through, from the buyer to the seller to the analyst in the office, all these people wanted Warren to do a deal. And he thought, wait a second, incentives rule everything. If everyone here is getting paid if I do this deal is going to happen. What I need to do is pay someone if the deal doesn't get done. That way I can have two different incentives working in conjunction and we can actually get to the truth. I need to have someone who gets paid if this doesn't go through. And so that's a cool little anecdote for you.
You can lose money, don't do it until you do. There's always a way to lose money in the deal. And you not only want to find a way to lose money, but you want to find all the ways you can lose money in the deal, right? We're always controlling for the unknown or the unknowable. We want to minimize that to the highest degree possible. So if you don't know how you can lose money, don't do the deal until you do. If it feels rushed, don't do it.
It is incredible how many people are interested in some type of investment and they come to me for reassurance. They're not looking for truth. They're looking to confirm their bias. When you see this from a third party, it's really interesting. The amount of clients who come to me are people who come not trying to find out if an idea is right, but trying to find out whether or not I'm the kind of person who's going to prove them right is insane. And so I like this idea. You need to separate yourself from an investment that seems too good to be true and always think about how you could lose money. Again, remember, the best investors in the world don't win all the time. So you need to make sure that your wins are larger than your losses. If your losses are 100% losses, you're hooped. You're throwing off your ability to win over time.
If it feels rushed, don't do it. A lot of people will try and apply pressure to you. They're trying to say like, hey, do this deal with me. Hey, give me this money. Hey, can you lend me this thing? If someone tries to pressure you, pause. If you feel rushed, don't do it.
I just find this kind of ironic because Alex has kind of built his career on the back of like great marketing, great sales, closing people. But he does have a similar philosophy on sales to me. You know, there are some people out there, me included, you included, we've all had times in our lives where we were beating around the bush because there was an obstacle we just couldn't bring ourselves to overcome that led to some better life. A lot of the time, what a salesperson will do is pull you into that future because there's someone who's a third party who's incentivized. So anyways, all I'm saying is that it's funny how Alex is saying, don't do anything if you feel rushed, while subsequently making other videos about how to rush people and how to close them into sales. But anyways, I digress.
If you only have one deal on the table, don't do the deal. Always have backup deals. Imagine you're dating and there's only one girl on the planet. You're gonna find a way to think that that girl, and if you know your gender's reversed, flip, right? Whatever, you know what I'm saying. There's only one person on the planet, then you're gonna find a way to make that work. And so it's kind of the same thing with deals. If you only have one deal on the table, you're gonna keep telling yourself, man, maybe this is a good deal because you have nothing else to compare it to. You always wanna have a plethora of options to choose from. And until you get those many options to choose from, don't move forward, because what happens is you artificially make that girl look a lot better, or that person or that deal looks a lot better when there's nothing else to compare it to. If you buy with the intention of selling,
you know what, that's really interesting. Anybody who's been trying to work on their own or doing something off the beaten path, be an entrepreneur for let's say 5 or 10 years, knows how many opportunities get thrown at you, whether it's investments, whether it's partnerships, whether it's these just different, co-ventures with people. And what you realize is that none of them end up working out. Like 90% of things never actually pan out into something real. And so I think that the corollary here is people who are new graduates, people trying to get into a new line of work, they often see some job offer as like, oh my goodness, this is so much better than my current circumstance. What they don't realize is they haven't gone through that period of having so many things not pan out that they're not okay saying no to a bad offer. And so I like this idea of having multiple investments to choose from, having multiple job offers to choose from, because ultimately, if you don't have multiple, you're just comparing it to your dreadful current existence, not to many different potential futures.
if you buy with the intention of selling, you're not investing, you're trading. Investing is about very, very long time horizons. It's a whole different set of rules. Where you get in trouble is where you're trying to apply business stuff to investing or investing stuff to business. Like, they are different skills to master.
That's a great one. I love that. This idea that operating a business, which is all about urgency, activity, doing more and more and more reps, versus investing, where success is found in mostly sitting on your hands and making a few very big key decisions every now and then. And so great business people tend to have struggles with investing because they're so used to operating the business, not sitting back and letting the investment produce for them. I also like this idea that if you're doing something to sell it, you're not investing, you're speculating. And so anytime you get into an investment with the thought that I'm going to sell this to make money, as opposed to I'm going to own this and it will pay me in the future to own it, those are two different things. One of my most popular videos, everyone just argues with me in the comments. They're all trashing me, saying, how do you not think a Rolex is an investment? Commodities, you don't think commodities and gold are an investment? No, they're speculative because you're buying something hoping you can sell it higher. You're not buying it for its productive ability to help society and pay you for that. Anyways, moving on.
If we don't agree, we don't do it. This comes into play when you have a partnership. This has saved me so many mistakes because I'm usually the yes man. I tend to see more upside and less downside. Most entrepreneurial people are that way because we have to be. Because if we actually focused on the likelihood of success, which is usually low for most entrepreneurial things, you would never get started. It's good, A, to have a partner who balances that, but B, they actually have to balance it. If they're just a yes man and they always bend to your will, then they're not actually providing value. There's a reason yin and yang are equally weighted in the symbol. If you don't agree, don't move forward. Even if I have decision-making authority, I still won't move forward until we agree. As a tangent into marriage stuff, we get asked this all the time. They're like, well, if push comes to shove, somebody has the upper hand. Honestly, no, we keep talking about it until we agree. We don't make the decision until we both agree. And it's been one of the earliest pieces of advice.
I think that's a repeat rule if I have that correct. Guys, when you're pushing out this much content on a regular basis like Alex is, there's gonna be errors. You only have so much time in a day. You can't rewatch the same video 14 times trying to get all the edits right. It's okay, Alex. That was...
If it's complicated, pass. If it feels above your head, it probably is. People want to feel fancy. They want to get into the room. They want to do these deals. But if you don't get it, you're going to get fucked. If you have complete understanding of something, the risk goes down because you understand the variables. If you're barely catching on, you might as well be gambling. FOMO means slow down. So if you feel that emotion, you're like, I'm going to miss out on something, slow down. This is a decision-making variable. When you feel that emotion, slow down. These are principles. You start flexing these like muscles. If this, then that. If this, then that. It preserves your ability to make better decisions over time. And if you apply all of these things to all of the decisions you make, you will have outsized returns over a longer time horizon.
As great as life is, and as much as I talk about business success and how well things are going for me after a long period of struggle, I'm still not where I want to be. And I still fell short of the goals I set as, an idealistic teenager for myself. And I think a big reason I fell short on a lot of things was constantly chasing shiny objects. There's a new thing that's coming out. Oh my goodness, it's crypto now. Oh my goodness, it's AI now. There's things like bunny rabbits, they bounce around like the little animals. But then there's money rabbits, people who bounce around from one hot, profitable thing to the next. Don't be a money rabbit. Find your niche and stick with it and consistently stick with one thing. That's the only way I have ever seen anybody in my clientele, in my friend group, in my base of everything I understand about finance. It's about going all in on one niche. These people who hop around from thing to thing to thing, they're looking out at venture capitalists who have 20 different holdings thinking that's what they're supposed to do. That's something you do after. You go all in on one thing first.
No diligence, no deal. If you don't get the information you need to make the decision, you don't make the decision. And I know this sounds ridiculous, but many of you do this. You just go off the hype. You go off an email or a phone call. Get the information you need. No model, no deal. If someone doesn't send me their proposal for how something's going to grow or how something's going to improve or how they're going to add value, then there's no deal. I don't want to hear a story of it. I want to see the math behind it. I want to see the projections. And then when I look at those things, I can make the decision like, is this reasonable? What assumptions is this based on? Do I think those assumptions are reasonable or probable? And what information can I bring to this decision? What are the things I need to believe that have to be true for this to occur? If someone's non-responsive, no deal. Communication is one of the most important things when you're doing any kind of business in general. And I judge someone very quickly on how meticulous they are in their responses and how quick they are to respond in general. Now, if someone says, hey, I received your email, I'll get back to you in 2 days, and then they get back to me in 2 days, that's fine. It's about expectation setting and expectation meeting. I expect, especially in this process where I'm just getting to know you, what you say is going to happen is going to happen. It's one of the easiest ways to build a reputation is do what you're gonna say what you're gonna do. And if someone's not doing that with you, don't do the deal.
I came on here to judge Alex's video, and now I feel judged. I think one of the areas that I'm particularly weak is that I block respond to things. And so I'm not constantly responding to texts throughout the day like I used to as an early stage advisor. I'm not constantly responding to emails when they come in. I'm blocking off sections of time to respond to things. If I miss that block, sometimes people don't get responded to for 8 hours. And so when every client has your phone number, which is maybe something I should work away from, all I'm getting at here is I am not as good at this, and I think Alex is right, and he's pinpointed something that's a piece of reflection for me, which is that if I want to be taken seriously and if I want to be a great service person, I'm going to need to do a better job of responding on a dime.
If it costs peace of mind, don't buy it. So if anything costs me my sleep or something that I'm worried about as a result of me making an investment or a purchasing decision, I don't buy it because the cost is too high. If it doesn't build your reputation, don't do it. No neutral moves. Your brand, personally, your reputation is the one thing that you take with you forever. And you absolutely can lose it, and it can be irreparably damaged. I'd only do it if it builds my reputation. When we do that, we continue to reinvest in our reputation, in our personal brand, which gives us compounding returns over our entire lifespan in terms of relationships, in terms of literally financial returns, in all other aspects of life. Only invest if it builds your reputation. If it doesn't build, don't do it. No track record, no deal. Performance over charisma. The best predictor of future performance is past performance. Sure, they have a model. Fantastic. Oh, they're allowing us to do diligence. Great. Oh, they're being very responsive. Phenomenal. But if they have no track record, Might they be successful? Yes. But if I invest in every deal that doesn't have track record, is that a good way to invest? Probably not. Like Napoleon liked to say, I'd rather have lucky generals. Someone's gonna probably do their deal, it doesn't have to be you. If it's the same thing you've always done well with, do more of it. We as humans or entrepreneurs, we like having variety. The thing is that a lot of investing, a lot of compounding comes from doing more of the same thing. So it's like, hey man, I've done 3 hard money loans and they've all been awesome. It's like, well then you should probably consider doing a 4th rather than starting to get into crypto day trading. What happens is you start to build your own track record. And so you can start looking back over your shoulder and be like, okay, let's look at all the things that I've done. These have been the things that have worked well. Maybe I'm better at this stuff. And so that's the idea. Once you find something that you're starting to get good at, do more of it. Because the thing is that your luck will improve the more you do.
That's interesting. One thing I'm finding between myself especially and clients that I work with is that we tend to deflect when we don't have clarity in our own personal lives. And so what Alex is saying here is, hey, instead of becoming a Bitcoin trader, instead of diving into your investments and how those can make you wealthy, maybe what you really need to do is assess your current life and your work and your business. Look at your own little sphere and say, how could I double my income? How could I increase my income by 50%? How could I do what I'm currently doing better so that I could have more to invest instead of thinking about the nitty gritty of how to invest? Oftentimes, I'm a financial therapist and I'll have clients who have a really tough time in their business. They're not clear on what the next step is. They don't really know where to go. They're at a roadblock. And it always concurrently happens at that time that they want to really get nitty gritty and picky with their investments. They're deflecting over here what's going on with the business to try to focus on making progress somewhere else. Really, this is a lesson for me too. Maybe find clarity where you're making your income and double down on that and let your investments do the work that some other CEO or board is doubling down on.
Always under borrow. Any number, no matter how big it is, multiplied by 0 is still 0. I tend to be very risk averse when it comes to debt. Debt introduces risk into any equation. If you are gonna borrow, then under borrow. So even though you could juice your return by getting more, remember that there is a likelihood over a long enough time horizon that if you overjuice on a consistent basis, you will get 0. Always under borrow. Then you won't make as much money, but you won't lose it.
I think this is something not a lot of people understand, is this idea that all it really takes is one big loss and now you're down to 0, right? Charlie Munger said there's really only 3 things that can bankrupt a sharp guy: liquor, ladies, and leverage. And so what he's getting at is it's your vices or your desire, your greed for higher returns, taking on leverage to make an investment, taking on too much debt so that you can keep up with your buddies, all these sorts of things. That's what's really going to put you in the hole. That's what's going to bankrupt you. And so over the long game, if we're trying to succeed over a long period of time, we need to make sure there are no quadruple bogeys. If you are a golfer, you understand you can have a great round, but it's just that one triple or quadruple bogey that can throw off the entire round, throw off your entire score. And so we're trying to eliminate those massive losses. Those can come from liquor, ladies, leverage.
Ask stupid questions, define terms, draw pictures, see examples, and if you can't draw it back, you don't get it. I start every single call when somebody's gonna bring me something, I'll be like, pretend I'm a golden retriever that doesn't speak English. Walk me through this. There's no advantage to somebody thinking you know more than you do. None. But there is advantages to you knowing more than they think you do. Always play the fool. If we're not in the GP, we're not in the deal. Once you have 10, 20, 30 million in investable assets, just say, I want a part of the GP. I don't know what the GP is.
That was a little smug. Once you have 10, 20, 30 million in assets, just ask to be a GP. I love Alex, but that's just bad.
General partner, limited partner. The people with the general partners are basically the people who run the thing, so they get an extra slice of the pie versus the limited partners who actually invest the money. We only do deals where we're part of the GP, because I want to make sure that we have a part of the people who are really running this thing. If it's a bad person, it's a bad deal. Layla has an impeccable people picker. It's unbelievable. My entire relationship, she's never been wrong. And it's why I've been wrong all the time. I'm like, this guy's great. Layla's never been wrong. Bad partners, doesn't matter what the paper says, don't do it. There are so many reasons you should not do a deal. You should be saying no way more than you should be saying yes.
What's interesting that I've found as I grow up and watch people around me start businesses, it's unbelievably common to have people making a ton of money within some sort of business venture. Everyone's getting rich, everything's doing great, but everyone hates each other. And so there is no amount of money that is worth working with bad people.
No contract, no deal. This is a really important one for me. Gotta have contracts for everything. Contracts serve the purpose of setting clear expectations. What happens if you lose all my shit? What happens if you don't do what you said you're gonna do? What happens if I don't do what I said I was gonna do? What happens? Like, you gotta walk through that. If you can't walk through in the beginning, you're definitely not gonna walk through it when it actually happens. And anyone who says, I only do handshake deals, I don't do contracts, run the other way. Not once, has someone approached me that way and they not being unbelievably shady. If there's anything you get from this video, if someone says, I don't believe in contracts, be like, I don't believe in dealing deals without contracts. Sorry. Clear expectations, good. If you're the one people are doing business with, I like to pretend like the contract doesn't exist. You absolutely want to be clear when you're writing the contract and the terms. But then as soon as that process is over, live as though the contract doesn't exist. Negotiate it as though it's the only thing that matters. Let's say I have a services relationship that's a year long. I want to mentally think, even though they've committed to a year, I'm only week to week. They don't have to pay me next month. If you go on the defensive when you're contracting, but you go on the offensive when you're in delivery, you kind of get the best of both worlds.
So all in all, a really good video from a really insightful guy. I don't think anything he said there on the investment front was really bad. I think everything was pretty solid advice. I was expecting maybe some of this passive income, get rich quick, unrealistic expectations, go out and start a company, build something great. That's how you get rich, which is, true, but not necessarily practical. I think for Alex's audience, and even for just a general investing audience, that was a great video. I wish I had some beef with him. I wish I could really tear into him, but that's a great video. Hopefully you guys got something out of my insights watching Alex, and I definitely got something out of that video too. So anyways, thank you so much for watching this video, you guys, and we will see you in the next one.